Today, we're breaking down the incredibly complex, rapidly growing business of Palantir Technologies. You probably know them by their ticker symbol, PLTR. We're going to completely unpack exactly what this company actually does, how they make their money, and decode the absolute massive surge we've seen in their stock as we navigate through 2026.
Right out of the gate, we have to tackle the big foundational question. Is Palantir becoming a fundamental utility for the modern economy, or is it just another overvalued software stock? It's a debate that's totally dividing the market right now. Because on one hand, you've got a business exhibiting just unprecedented financial momentum. But on the other hand, the stock is trading at a premium that literally makes traditional value investors break out in a cold sweat. So, to figure out which side is right, we really need to look under the hood and objectively analyze their financial health, their unique business model, and the hype surrounding that 2026 valuation.
To understand the stock, we first have to understand the company itself. And to put it in simple, jargon-free terms, Palantir doesn't just sell off-the-shelf apps. They build mission-critical data infrastructure. Think of it like this. Imagine a massive organization with thousands of messy, totally disconnected databases. Palantir software comes in, integrates all that unstructured data, and creates a central operating system so users can actually make real-time, high-stakes decisions. Now, they started out exclusively solving these problems for the military and intelligence communities. But they quickly realized, hey, these massive data problems, they exist in every major commercial enterprise too. And honestly, that is where the real investment opportunity lies.
The company's core software is essentially split into two main pillars. First, there's Gotham. That's their legacy platform, custom built for government defense, intelligence, and law enforcement. Then you have Foundry, which was built specifically for the commercial sector to drive business efficiency. But the thing that has fundamentally changed their entire trajectory recently is AIP, their artificial intelligence platform. AIP essentially sits right on top of these older systems, and it allows organizations to securely deploy advanced AI directly into their most sensitive workflows without risking their data. This new product is completely changing the game and heavily impacting their long-term success by making advanced AI totally accessible to non-technical everyday users.
Okay, so how do they actually make money? Well, Palantir relies on massive, multi-year software contracts. But unlike simple plug-and-play software, Palantir's deployments usually start with heavy professional services. That means Palantir engineers are literally sitting side by side with the client to build the system out. But here's the magic. Over time, as the system gets fully deployed, that early heavy lifting transitions into highly profitable, recurring software subscription revenue. Management calls this their land fast, expand hard model, and it's brilliant. It dramatically improves their project margins as time goes on, essentially turning costly, labor-intensive setups into massive, automated cash generators.
What's really fascinating here is Palantir's identity moat. A moat is a company's competitive advantage. But Palantir's moat isn't just that they have super smart AI. It's how deeply they embed themselves into a client's daily muscle memory. Once Palantir's platform becomes the central nervous system for a hospital, or a global manufacturer, or a military unit, ripping it out is virtually impossible. It would completely destabilize the organization, and that deep structural stickiness, that's absolutely crucial for long-term investors to grasp.
So how exactly is this moat built? Well, step by step, they start by ingesting a client's messy data to create what they call a digital ontology. Basically, that's just a digital twin of the entire operation. From there, the software becomes the central decision-making layer, providing concrete, immense project efficiency. For example, imagine a huge logistics company using it to autonomously reroute global supply chains in real time during a crisis. By improving overall efficiency so profoundly, Palantir establishes behavioral lock-in. Employees rely on it so much to do their jobs that the switching costs to move to a competitor become overwhelmingly prohibitively high.
Now let's talk numbers. $8 billion. That staggering number represents Palantir's cash and short-term securities as of Q1 2026. And what's even more impressive, they have absolutely zero long-term debt. None. When we evaluate the company's financial health, this is what you call a fortress balance sheet. It gives them the ultimate flexibility. They can invest heavily in R&D, they can easily weather economic downturns, and they can strategically expand without borrowing a single dime. When we compare revenue and operating income trends across their business segments, a really clear narrative emerges. The government sector is still providing a highly stable base, making up about 55% of total revenue. The remaining 45% is commercial. But to really understand their profit engine, we have to split that commercial slice into our second and third segments: international commercial and US commercial. While the international side has actually been a bit sluggish in its profit contribution lately, US commercial is the absolute star of the show. It's exhibiting explosive triple-digit growth,
and contributing so heavily to their overall operating income that it's effectively offsetting any weakness in the international markets.
Just look at these Q1 2026 financial milestones. They generated a massive $871 million in GAAP net income and $925 million in adjusted free cash flow. That is an incredible 57% free cash flow margin. On top of that, the US commercial sector crossed 100% year-over-year growth for the very first time. I mean, this proves that the intense demand for their AIP product isn't just hype, it's translating directly into massive cash flow and exceptional financial health.
Now, a few years ago, critics rightfully pointed out that Palantir paid its employees way too much in stock, known as stock-based compensation, or SBC. And yeah, that diluted shareholder value. But management heard the critics and successfully shifted their strategy. They drastically reduced SBC as a percentage of and transitioned into a fully GAAP profitable business that consistently hits the Rule of 40. That's a key industry benchmark combining revenue growth and profit margins. It's incredibly clear that management is prioritizing long-term sustainable growth over the short-term cash-burning habits of their startup past.
To understand why they are winning, we have to look at where the industry has been heading through 2025 and 2026. There's been a massive progression in business intelligence. At the bottom, the baseline, you have low-value tasks, basic reporting, simple queries. But as you move up the curve, the true value is all in predictive analytics. This progression explains exactly why Palantir is succeeding. They aren't just handing companies a basic search bar for their data, they're providing advanced predictive intelligence that fundamentally improves organizational foresight.
And industry surveys are entirely confirming this shift. When businesses are asked where they are focusing their software development right now, nearly 30% point directly to predictive analytics, with machine learning right behind it. This perfectly aligns with Palantir's future phase opportunities. They are skating to where the puck is going, ensuring their product roadmap perfectly matches the market's exploding demand for AI-driven forecasting.
Which brings us to the long-term vision behind their recent expansions. As we move into 2026 and 2027, the enterprise AI industry is shifting dramatically. The whole market is moving away from those simple conversational chatbots we all got used to, and it's moving towards something much more powerful, AI and sovereign AI. And Palantir is positioning itself right at the tip of the spear for this evolution.
Let's break those terms down without the tech jargon.
Agentic AI simply means software that doesn't just answer your questions, it actually executes complex workflows and does the work for you autonomously. Think of it as an AI employee. Then there's sovereign AI. This is a massive new market where countries, especially over in Europe and the Middle East, want to keep their top secret government data completely off of foreign generic cloud servers. Palantir's unique ability to build localized, highly secure data environments makes them the absolute partner of choice for these nations, and that is significantly accelerating their global market expansion goals. Taking a step back to look at the broader industry, the big data and analytics market is projected to just absolutely skyrocket, going from the tens of billions right into the hundreds of billions. This massive market expansion perfectly sets the stage for Palantir. They aren't fighting to steal a slice of a shrinking pie. They are operating right smack in the middle of one of the fastest growing technology sectors in the entire global economy.
So, what are the primary factors driving revenue and shaping the company's 2026 and 2027 outlook? Management plans to sustain this insane growth by executing on 4 key strategic pillars. First, riding that explosive US commercial momentum from AIP. Second, maintaining their strict Rule of 40 financial discipline. Third, executing on massive, decade-long commitments like their new $10 billion US Army framework. That contract deeply integrates with their core operational goals and provides an incredibly stable revenue flow. And finally, scaling their enterprise software adoption without having to dramatically bloat their own internal operating expenses.
But as with any investment, we have to keep our feet on the ground and objectively summarize the key risks. The bull case is obvious, right? A deep identity moat, zero debt, massive free cash flow, and absolute hypergrowth in AI. However, the bear case is heavily focused on valuation. The stock trades at an astronomical 238 times trailing price-to-earnings ratio. Critics argue that even with perfect execution, it could take years for the company's actual profits to mathematically justify this sky-high valuation. Plus, there's always the ongoing risk of unpredictable, lumpy government contract renewals. So, to wrap it all up, Palantir has firmly established itself as a foundational utility for both defense and commercial enterprises. They've blended a powerful economic identity moat with staggering financial momentum and a bulletproof balance sheet. But it leaves us with a pretty provocative question to consider. As AI continues to completely reshape the global economy, is Palantir simply an overvalued software provider riding a hype wave,
Or are we actually watching the creation of the indispensable central operating system of the 21st century?
As always, please remember that the information presented is strictly for educational purposes. So be sure to always do your own thorough research before making any investment decisions in Palantir or any other company. Thanks for joining me and keep learning.